G'day there. Welcome to the closing bell on the 15th of November for me on the Friday Arvo. And look, I know it may be boring, but we really do have to have a chat about the US dollar and what it's doing. And the Aussie dollar looking pretty dangerous, I think, as it collapses. And to start off, I got that wrong. I'm happy to admit that when the US rates started falling and everyone was thinking Aussie rates were going to stay high, it seemed like a no-brainer that the Aussie dollar was going to rocket. And the music stopped very quickly with the odds of Trump getting elected going higher, and now he's been elected, and we're seeing that US dollar absolutely flying higher. I want to show you that chart to give you a sense of what's going on, and there could be a lot more to come down the track. And have a think about how your portfolio is aligned to a world with a US dollar that is very strong and potentially an Aussie dollar that is very weak. As I've sort of been saying, companies with some offshore earnings, I'll show you a few of those at the end to consider. Some of the larger stocks, but they're the ones that are running. The market overall looking pretty good, but commodities under pressure, as we're seeing Hang Seng getting hammered. If this 60% tariff comes in, what is going to happen to their exports, etc. Property market's already on its knees. So we are seeing some pretty serious selling pressure in the Hang Seng, for example. We are seeing Aussie dollar going down. We've seen copper getting hammered. Also, gold has cracked under the pressure. And although it's, been flying higher, so it's probably time for a bit of a correction. But there's things on the move, isn't there? Bitcoin also really going bananas. So I'm sure Ryan Dintz, you've been following him. He's been nailing it and going really well there, calling Bitcoin to just keep marching higher. So there is changes afoot, and when the market changes, when things start moving, and it's because of this US election, like those themes can really carry on. And this is why I wanted to wait a few weeks after the election to see what was really going to unfold. And for me, it looks like that US dollar is the theme of the moment. And I just wanted to cover off quickly before we get stuck into it. I was watching or listening to a pretty cool podcast, more for DAGs, who like economics. And they were chatting about the fact that the last time Trump did the tariffs, he put up the tariffs on Chinese goods, but then the US dollar actually rallied as well. So what happened in the end, the actual US dollar cost for people was pretty much unchanged because the US dollar got so much stronger, imports cheaper, then the tariff went on top, which made things pretty much break even for people buying in the US. So there wasn't a big effect on trade, but there was an effect on the currencies with US dollar going up against the yuan. So in the end, Trump's tariffs last time were paid for by the Chinese people with their currency getting weaker. So that's something to consider as we go forward. This US dollar flying higher, and with the tariffs, maybe trade won't be affected so much, but there will be that pressure release valve in the currencies. And ultimately, China might be the one paying. So that is an added thing to be thinking about as we, move forward. So let's jump to the charts and have a quick look at what's going on. So this is the US dollar over, a long time frame going back to 1995. I wanted you to see the big picture of this. And the first thing to note from, the crash in 07, 08, what can we see here as far as the US dollar moves? Uh, you know, is it in an uptrend? It certainly is, isn't it? It's been trending higher pretty much since then. And just for the last couple of years, we've seen the US dollar really treading water. And the other major point I'd show you is the fact that this whole area was major resistance for a long time, all through here, around 100 on that US dollar index. Um, you can see that that US dollar was rejected over and over from that area for 5 years, going into 2022. And then we had the breakout above that level. Then we've seen the retracement, which has been holding and it has found support. So you know that resistance becomes support. And now that that's held and it's turning up into the long-term uptrend, that's pretty powerful, isn't it? That it has held that level and is still trending higher at a rate of knots. Are we on the verge of a much bigger move than people realize? Um, it is the next wave higher in a very long-term uptrend in that US dollar. So you can see in the past as well, it's sort of like this that the US dollar consolidates, for a year or two, and then you get the blast off. We've had that consolidation period going on. So it is sort of getting long in the tooth and possibly ready to go. And the other thing I wanted to point out just for that US dollar is looking at those waves. You can see once we've got that wave in place, I've got that range set up. There's your midpoint, and then you've got it, oscillating between the buy and sell zones before it's ready to take off again for the next wave. But just notice that whole next wave, where did it pull back to? That midpoint, so important. You can see prices bouncing there, showing you that the trend is strong. And then we've got another wave to the upside, the next one. And you can see prices bouncing on that midpoint, just showing you how strong that trend really is. And I was saying recently, if it went under 100, I was like, wow, watch out, this could get hammered. And it managed to hold above that major level. So all signs are of, big picture, very big picture, that US dollar still remaining strong and the overall trend structure still very strong as well. So it's coming up to this, resistance around 108. Are we going to bust through it? Possibly it's going to have to stuff around for a bit. Maybe once Trump actually gets in and the policies start happening. But you've got to look at this from the point of view of that US dollar strength will be maintained, and yeah, really, it's got to fall back under 100, 102 to change the picture. So from now on, you're looking at it as a strong US dollar world that we're going into, and that has repercussions. So this is the Aussie dollar, and happy to say that when it was up around this area, I thought it was actually going to break out and run towards that sell zone there, but couldn't do it, and the whole world changed. So I just wanted to show you this Aussie dollar, which I don't really like the look of. I think it looks a bit dangerous for a lot more downside in the short term. And I'll tell you why. So big picture, we know, look at this. This is a pretty serious downtrend. I won't go into every single wave, but you can see there from that perspective, this idea of the downtrend all still in play for that Aussie dollar. The downtrend began in the short term, just in the last few years. We've seen the trend turn down, and you can see the long-term downtrend there. This is a monthly chart, all marching lower. I'm looking at this corrective wave, and we've got the midpoint of that. So the point of control of that around 68 cents. And it's really been just struggling, hasn't it? Trying to break away from that, and couldn't do it. in the end had a little false break and has failed back below that point of control, the midpoint, and has also confirmed last month the monthly sell pivot there. So you've got the monthly sell pivot, prices going back below the 20-month moving average and really probably heading back to being in long-term downtrend. It's a bit of a false signal that we've seen there of prices looking like they might be shifting to long-term uptrend. So it's like a dummy. So really it's turned very negative and prices now heading down to test. And this is where you can get these dominoes lined up where there's stop losses will be set up below those levels from the buying that's occurred sort of in this area. So there's going to be a lot of stoppies below there. And if it happens soon, this is where you can get that sort of domino effect of stoppies feeding on stoppies. And, maybe that will be it, or there'll be more downside. But just right now, the risk for that Aussie dollar really is to the downside. And, that then obviously affects, that could be on the commodity front as well. That US dollar flying higher means commodities are under pressure from that US dollar pricing perspective. And, is this the China fear? Their currency coming off the boil as tariffs go up. Uh, are their exports going to get hurt? And their property market's still in trouble. So, that could be part of the perspective as well. So let's just have a quick look at that Hang Seng. So this is the Hang Seng, a bit of a proxy on China, I guess. And you can see that we had that flurry of buying, a big spike that occurred over the last few months. And with the Trump election, the reversal is happening and we are seeing selling pressure. So look, this is a very tricky chart to be making big statements about, but I'll just give you, as I've said before, the lines in the sand. We know that it's, trending down. You could look at this, and even though it's had that little spike there, you're sort of looking at it as this is still trending down and looking pretty weak compared to the last few years. But it did pull up in an area where there can be a reversal, and that's just looking at the just very quickly, the major buy zones of the major waves. So if I'm looking at this and I'm analyzing it, I'm saying you can see there was your buy zone area of this major wave, and that was a beautiful reversal point. Then it's gone off for another big wave. So here we are. Here's your buy zone area of that. And the fundamentals on the Hang Seng, it is getting down to a point where the PE ratio is actually, things are starting to look pretty cheap. I think even under 10 on future earnings. So, it may be getting good value after years of selling off. So you've got to think to yourself, is this ultimately going to be a buying opportunity, which it may well be. But for the moment, you have to respect the fact that the shorter term is actually still firmly down. And we've had an attempted rally above a key resistance, false break, and possibly a monthly sell pivot coming in this month. So I can say categorically that I don't like the Hang Seng below these major lows, so below 15,000. If we do see the selling really ramp up and things break down below there, then that's really watch out. But that hasn't happened yet, that's for sure. But you've just got to say the short term is saying watch out. There is going to be more downside, and it's just where is the buying going to step in? Is it going to get to a point and then have the nice reversal? All well and good if it does. Or is it going to break down below 15,000 and watch out if that happens down the track? So for the moment, I'm looking at this from a pretty negative space, wondering how far it's going to fall before finding buying support. So that's all where copper's coming off the boil and commodities, and you got to and gold as well. Maybe some more downside there as that US dollar ratchets higher. So these are all things to think through. Looking at it from a opportunity perspective, have shown you a few of these recently, but just reiterating, companies, offshore earnings, US-based earnings, etc., are seeing some pretty good buying and are trending quite nicely. Something like QBE Insurance, it has been trending higher for a while, but there's that major resistance that it is from 2013, and it's looking like it's busting up through that, and it's a long-term uptrend and breaking out. So, is it a major breakout where we're going to see nice, strong move to the upside? And they actually will make money with higher rates over there. So, they've got a bit of positive beta to rates being a bit higher as well. Also, there's James Hardy bouncing back, still up near the highs, but a company with a strong moat for its business and good US exposure, and obviously a very strong chart trending to the upside. Major resistance, of course, has been for years around this sort of $60, but is it just working its way up to bust up through that and go on its next run higher? So that one for the more conservatively minded, and also even Breville Group is testing up near its all-time high, has been trending up quite nicely. They earn a lot of money over in the Americas compared to their total sort of revenue. So that one, and they've been growing quite well over there as well for the last few years. So, you've got to think, is it getting close to breaking out above that high from 2021? Long-term uptrend in play has just gone to retest the 10-month exponential. So, something like that could be worthy of the bottom draw for the next few years as a bit of a hedge on that, Aussie dollar really plummeting and getting exposure to a growing America on America first policies. I don't think is a bad idea. That's a pretty long one today, but a lot going on, I think, and a lot to think about as that US dollar flies higher. All right, cheers. That's enough. And please be sure to check out my document below, the 6 lessons for you to learn, how to trade the markets in a much more efficient way, how to manage risk, how to predict these moves and see what's coming next. It's based on years of observation in the markets. I've been in the market for a very long time, starting on the futures floor in Sydney. So please check that document out. I reckon you'll have a lot to learn, and it'll improve you as a trader and investor. All right, cheers. That'll be below the video. And I shall come and chat to you next week. Cheers.